And it's another trading day right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. United Nations Conference on Trade and Development is warning that international investment in 2025 has turned negative due to changes in global trade policy. And smartphone prices in Nigeria rise 80% in 2025. NCC also reports 29% drop in total active mobile subscribers. The Central Bank of Kenya received 71.6 billion Kenyan shilling loan after reopening bond issues in June 2025. It's great to have you join us. I'm Ladi Williams. Let's get a check on what's playing out with major markets that we track now, starting with oil. We're seeing oil prices they ticked higher, fueled by overnight missile exchanges between Israel and Iran and renewed uncertainty stirred by U.S. President Donald Trump's vigorous stance on the conflict. We're seeing Brent crude there, 0.50% up, $77.06 a barrel. Is this the path to $80 a barrel? We're definitely watching out for that. Just about $3 more. WTI, that's a U.S. grade, that's at $75.68 a barrel with a bigger 0.70% jump there. We see this month Brent hit a near 5-month peak there of $78.50. That was June 13th, shortly after Israeli strikes commenced right there. Let's go check on metals now. See, for the metals market, we're seeing it's red across board there with gold prices still holding steady as investors they're keeping an eye on the conflict between Israel and Iran. A 0.40% drop for spot gold. U.S. gold futures a bigger 0.60% drop, $3,387. Then we see the biggest drop right there, and that's with platinum, 2.50% down, losing the $1,300 level at $1,288. Palladium, that's holding on to the $1,000 psychological level, but is down 1%. And spot silver down a big 1.10%. Two other stories now. The Nigeria Interbank Settlement System, they've launched the National Payment Stack, NPS, which is a cutting-edge national payment infrastructure. Speaking at the launch, the Managing Director and CEO of NIBSS, Premier Oyewo, described digital payments as unified payment, which aligns with local interoperability and support for cross-border payment. He added that this newly launched platform has, which is Africa's first real-time account-based digital payment solution, has positioned Nigeria as a leader to assist other African countries in building their own payment switches and to extend the use of the platform. I would say the delay in cutting rates in the United States means a sustained high cost of debt servicing for Nigeria. And this is the observation by the Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rouhani. It follows a whole decision by the Federal Reserve for the 4th consecutive time. Take a listen.
We have not maxed out on our borrowing requirements, but the most important thing for, as far as we are concerned, is that what are you borrowing to do? One, we are increasing our revenues because the tax law, the tax act is going to be signed by the president, according to Wale Edun, in the next 2 weeks. If that is done, we will see a growth, an increase in our revenue. But the important thing here is that Nigeria needs some dollars. And those dollars are either going to come from investments that are coming in voluntarily or from borrowings that are done strategically. So I'm saying that if we were anticipating to borrow because we thought interest rates are going to come down, therefore the debt burden, service burden will not be as hard as it was originally expected. Now, the drop in interest rates is going to be delayed a little bit longer towards the end of the year or early next year, which means that Nigeria will have to raise money at a higher rate than was originally anticipated. And if that being the case, we now have to be more efficient in the way we use our money. What are we borrowing for? What are the projects? Are those projects going to generate enough revenue to amortize and service that debt? Those are the key elements. And it is important because we have done about 740 days since the administration came into power. And the time is running out. So we need to be very, very intentional, very strategic, and focused on what we are borrowing for so that the impact, one, to generate revenue, two, to have an impact on the welfare of the people so that the people can see the impact, begin to reap the dividends of reform and policies and democracy.
And now to our first conversation. Across Africa today, consumer brands are eyeing vast export potential, driven preferential trade frameworks, growing global appetite for authentic African goods, and evolving regional integration with initiatives like the AGOA, as a duty-free access to the U.S., and the AFCFTA. We see exporters are unlocking new pathways, but also we see there's some gridlocks along the way. Some facing issues such as rising geopolitical uncertainty and evolving regulatory hurdles there. Let's discuss more now with Ehime Igwe. She's the founder and CEO of Sweet Kiwi, joining me right here in the studio. It's great to have you.
Thank you for having me here.
Yeah, so I know you do business here and outside, our shores, and definitely, I'm sure there are a couple of business owners here that would be trying to maybe thinking of exploring, expanding, to other regions. How hard is it really to do that? Or is it something, people are just afraid of because they don't have the information? How do you see it?
I would say it's two things, actually. It is difficult, especially when you're thinking about it from the African context or the Nigerian context. There are loads of barriers to global trade from the African side, such as availability of power. That's a big thing, because for you to be able to participate in trade, especially exportation, manufacturing is a big component of that. And obviously power is key to being able to manufacture. So those are part of the problems that I see that they face. Also with, not non-unilateral policies, especially with, exports and a lot of hurdles, CBN and all the things that have to be done, exporting container shipments. It's really, really hard to try to export, but also there's also the information gap in terms of help brands or businesses understanding how to play with international players.
Right. So if it's hard exporting, is it easier setting up shop in most of these regions and selling there? How easy does it make it easier? If you're not able to jump past the hurdles when it comes to exporting, you go out there and set up shop in the U.S. and start business. Is that an option?
It is an option. It could be an expensive option, depending on your status, depending on the kind of product as well that it is. I do think there are a lot of opportunities, but I think the opportunities start with addressing the actual problems and creating solutions to those problems. Last year, I worked on a project with USAID and Prosper Africa to help more African brands cross over into the US and in other international markets. And part of what the work we did was trying to find solutions to a lot of the problems. Having those brands have access to more international buyers. And we were able to see some of those problems from the perspective of the buyer. One of those is, delivery timelines. If I place an order, when exactly do I get my goods? And it's really difficult because there's no really schedule or timeline when containers leave, Nigeria or leave all these other countries and get to the US. Because that's not just a trade route that's really functioning at the moment. And that's something that we're trying to solve for. We should be trying to solve for. If it's coming from China, there's a fixed timeline. If I'm sending a container from China to the US or to Nigeria, there's a fixed timeline. But the problem is because there's not a lot of people exporting from Africa, a lot of, container shipping lines aren't dedicating containers to returning back to the US. Actually, from the information I have, the containers come to Nigeria or whatever African country, and then they go to Asia before they make their way back to the US. That's why it's easier to take cashews from Nigeria, ship it to Vietnam for processing, and then bring it into the US. But what we should be trying to do is make it easier for US customers to buy cashews directly from Nigeria.
Right. And, definitely that just makes it more expensive, at this point when you can't just go directly, with routes that, just should be, that should actually make sense. So, with most of the sellers or, the businesses that are looking to export, that you've worked with, do you think their products, at this point, they meet the, requirements, for international markets? At this point, are they getting better?
They are. Absolutely. I think that One of the gaps I would say is certifications, which is something that's new for us. I think the only certification that we do here is maybe NAFDAC and SON, but the US market's more sophisticated and there are standards that we have to meet. So you have people with different tastes, like, people want the product to be kosher because they have a Jewish population, or people want it to be vegan or a non-GMO. There's all these things, and it's more education around what certifications do the US consumers want, and understanding the market a bit better so that you can strategize your business to fit within that. But the products in terms of themselves are really innovative, really wanted. Last year we did a trade show called the Summer Fancy Food Show in New York City. It had all the major distributors, all the major retailers, and we had an African pavilion. And in this pavilion, the feedback that we got from buyers was they were really impressed by the quality of the products. There was definitely hurdles to jump, but they wanted the products. And the truth is, all the retailers care about is price. If you can offer me the same products at a better price and better quality even, they would love to be able to source directly. They were very curious to understand what products would be made in Africa, what they could source. And actually in the US, there's a big growing demand for ethnic foods. You can now find on the shelves Indian meals. You can find on the shelves meals from Asia, and it's growing and it's really, really doing well. Even African meals. There's a brand in the US called Ayo Foods. They do a jollof rice, and they're in all the major retail stores. And there's a huge growing demand for brands like that as Americans, start to discover new and interesting foods from across the globe.
Right, and when that debate about which jollof is better, is it the Ghana or Nigeria jollof, I guess everyone wants to try out, out there, which one actually, makes sense. So, definitely as a business here, what would you say are some of the opportunities right now, aside, food, that, most of these exporters should be looking at, to take advantage of these markets?
I think that there's a big opportunity in fashion. I think there's a big opportunity in beauty as well. In the US market, people are really looking for organic, healthier products. The US consumers are really driven by healthier options that aren't tainted with illegal substances. And, just being in Africa, our soil is so rich. We have really organic products, food products. We have great storytelling, which is something that the US market is so fond of. And we already have a few brands that are doing exceptionally well in these markets. So I know a Nigerian designer who's in all the major markets, in Saks, Fifth Avenue. She's in Neiman Marcus, and it's made here in Nigeria and doing phenomenal on a global stage. Great storytelling, great branding, great packaging, great positioning as well. It's understanding the customer and understanding how to sell to them. A lot of times it's not really changing the product, but changing the messaging.
Right, and talking about messaging, at this point, what would you, like to see when it comes to government policy to actually, help these businesses that are trying to, get the products out of, Nigeria, trying to produce more? We've had that issue about trade deficits. You're importing more, than you export. What would you like to see?
I would really like to see them take the lead. The truth is, in any economy, in any country, the lead when it comes to trade has to be taken by the government. You need to make it easier for brands to produce. You need to reduce the barriers to production. So power, water, making those things easier so that they can get their certifications that they need, like the FDA certification, and all the things that they need to be competitive in a bigger market. If you come to the Fancy Food Show, you see countries like Egypt having their own pavilion. You see countries like Morocco having their own pavilion. Nigeria should have its own pavilion at these shows, displaying the best in Nigerian food, in Nigerian fashion, and being able to also have policies that allow brands to export very quickly and easily without a lot of hassle. That's also a very, very big problem. When I worked with these brands last year, we had so many brands who closed major deals, but the biggest problem was shipping. When it came time to ship, there was no really fixed timelines, and at the end of the day, we had to air freight, which made it way more expensive and no longer attractive to the buyers. But the thing is, the retailers are paying attention, and Africa's caught our attention. Afrobeats has done so much to get the world interested in what's happening in Africa. For example, this year, I worked with Walmart on a project where Walmart was sourcing for all their 300 Walmart stores, own stores in Africa from African brands. And they source from across the continent, Nigeria, everywhere. The biggest issue with brands from Nigeria was shipping. You know, I worked with this chocolate company who was selected to pitch, but the biggest barrier to her getting the deal was the fact that shipping was so expensive. So how can the government come in to negotiate deals with, you know, big shipping lines like Maersk, like, you know, people who can really help cut the cost down of shipping to move the needle? If you look at the US market and look at other markets and see what they do so well, like our business and my business in the US, we get so much support from the US government. We work with USDA and they take us on trade missions. Actually just was on a trade mission to Hong Kong. This year I've been on a trade mission to Mexico, and we get to actually meet buyers. We meet people who are interested in the product, and this helps us to launch into other markets. We're about to launch into Mexico in a few months. So these are the things that the government is supposed to be doing, supporting through education, getting them the knowledge of how to do business with international players, and also making ease of business, you know, easier.
Yeah, just make it easier, you know, at this point, because it's quite interesting when you see the likes of, you know, China and the US, how those governments actually support these businesses. They support them in ways that, you know, sometimes you just wonder, is it actually legal, you know, to support a business, you know, this way as a government? But that helps them to...
It helps the government too, because you're getting, the brands are doing so much revenue, they're creating jobs, and they're helping the economy. The truth is, us as Africa, people, you know, when I'm in the US context and people talk about Africa and they talk about aid or how Africa always needs aid, especially in a time like this where USAID doesn't exist, a lot of organizations that are giving aid are not going to exist. A lot of countries are becoming very insular, and they're not going to be looking at Africa. It's time for Africa to take that step and realize that we're the only solution to our own problem. And the truth is, we don't need aid. We've never needed aid. We have everything, all the resources, all the right agricultural products, everything that we can export. If we increase trade on the African side by even 1%, that's about $75 million that's coming to Africa. So it's very clear that we don't need aid. We just need access to market. And the government can support us by making this a possibility.
I guess that's a good place to anchor it at this point. We don't need aid, we just need access. Thank you so much, Ehime NIBSS, the founder and CEO of Sweet Kiwi. Thank you for joining us today.
Thank you so much for having me.
Thank you. All right, we'll take a break now. When we come back, we'll head straight to the market and find out who's making money and who's not. That's in a moment. Just stay with us. All right, let's head straight to the markets now. We have Anita Edet with the details, and we see this trading week is winding down fast at this point. We have the TGIF trade tomorrow, but how's it looking for the Thursday trade?
Okay, Ladi, before we go to the TGIF, I don't know if there's anything called Thank God It's Wednesday, or it was Wednesday.
Right,
let's try and coin something for that.
Wednesday.
Thank God it was Wednesday.
Yeah.
Because Wednesday, the market, as a matter of fact, this is the figure that we saw just over an hour ago. And this figure, we didn't see this figure yesterday.
Right.
But before Wednesday's session began, it was from 114,000 points, but rallied by about 1.63%. When we track that number, you know, we mentioned it yesterday, the market gained in value terms 1.18 trillion naira just one day. Just one day. Right. And this is all thanks to the likes of Aradel, Seplat, Fugas, and so many others. Fugas is not a surprising move there, but that's because of that pleasant news from the central bank, which calmed the nerves of investors as well as the markets. So
quite interesting.
Exactly, yeah, and I'm sure.
Looking at the ASI there for the NGX, and just zooming in on the 100,000 level, we're 17,000 points above 100,000. Quite incredible.
Impressive. And if you take a look at this figure, it's not too far away from the 120,000 level. That would be a very new high. I'm seeing that that number might come in sometime in July, which is just about some 11 and a half days away. But in terms of trading days, that's just about some 7 trading days. Monday will be the last trading day. That's just about 2 Mondays from now. So I'm seeing that on the horizon, a 120,000 index level might be a new high for in between the middle of the year. And who knows? We just might get to the 150,000 points. All
right, there we have it from Anita's crystal ball.
Yes, that crystal ball. We really need to market that crystal ball. All right. Okay, so now let's talk more about this market. We see that the banks, and speaking of the banks, it was in the news that forbearance forbearance directive from the central bank at first had caused some jitters across the market, particularly for the banks. But at the same time, the banks have now come in to reassure investors, particularly the likes of Fidelity Bank, Zenith Bank, as well as Access Bank, and some others are going to follow suit. They've all mentioned that by June the 30th, that's by the end of this month, just over less than 2 weeks from now, that they would have cleared all the issues as regard the forbearance the directive from the central bank. Of course, that's one of the reasons why the market is really on fire. As we see the market's index level here, 117,088.62. But intraday, we saw a little bit of a profit-taking downturn on some other key elements of the market. But of course, we'll be tracking the intraday market numbers with our guest on the show just in a couple of seconds from now. Now, for the Johannesburg Stock Exchange, 94,578.50. That's the market's number, but that was in the negative for that market. A little bit of fast fingers there. Now, talk about the EGX 30. EGX 30 for intraday is down more than 1.5%, 30,350.20. While for the close of Wednesday's trading session, the Nairobi Stock Exchange All-Share Index was in the green, 0.89%. Of course, we see lots of bargain hunting going on in that market. Of course, that market is expected to open Thursday's trading session in the green. So now let's take a deeper look into Nigeria's equities markets and also talk about the banks, because the banks are still in focus. On one side, we're counting down to the recap deadline, which is sometime next year, around March of next year. So now, but let's talk about the forbearance directive, which this is the aftermath. That announcement, the announcement was made sometime last week, over the weekend, and then we saw the impact. But this time we're seeing a positive side of that impact. And so let's delve deeper into that issue. And we have Omotola Imafidon, equity trader with First Security Brokers, to give us details about that. Thank you for joining us, Omotola.
Thank you, Anita. Good afternoon, everyone.
Okay, so I can see that investors and you traders are quite happy with this index level and the gains that we had in just one day. Now, can you tell us how are the sentiments for the banks, as regards this forbearance directive and other developments within the markets?
Okay, thanks so much. So what we saw early in the week was the fact that the market was sort of in panic mode. The banks sort of sold off at the beginning of the week when the CBN circular came out over the weekend, as people were not too sure who was affected and the extent of the impact. The CBN had said that banks that were caught up in the forbearance regime and the single obligor limit had to suspend dividend payments. And we know a key driver for investors in the market is their dividend. We're approaching the season for interim dividend payments, and we're hearing, okay, there'll be suspension of dividend payments, executive bonus says has to be suspended, and expansion into international markets for some of them. So that sort of sowed panic to the market. But as you've already mentioned, we saw that there's been reassurances from the banks. Some are saying that, okay, the positions will be fine by mid-year. Some as by September. Some are saying, okay, we're putting structures in place. So market has responded positively to that. And coupled with the confirmation from the CBN that there's no need to panic, that the market is the banks are resilient, as we've said. So generally, the market responded positively to that from yesterday. So there were 2 days of decline at the beginning of the week, but yesterday we saw the recovery started coming, and today has been quite strong. So that's what we've seen.
Okay, so now let's move away from the banks and talk about the oil stocks. Seplat yesterday and Aradel, they were one of the major movers of the market, where we saw that 1.8 trillion naira in value added to the markets. Now, can you tell us what is the main driver for Seplat in particular? We know that it's an offshore oil company, but then also going into the energy market. So what is the latest driver for this equity as we speak?
Okay, yeah, thanks. So also the energy stocks have, they contributed positively to the market this week because of, basically we've seen that oil price, the unrest in the Middle East has sort of made the oil prices to go higher. And of course, investors are also looking at it that, okay, there's still value in this space. So we saw Seplat, we saw Aradel taking higher. We saw renewed demand from mixed interest, both local participants driving demand in that space. So it's basically in response, positive response to the fact that oil prices are going up and their production levels too. It's improving as well. So those are the things that have driven the movement we've seen in that space.
Okay, so now that takes me to my final question with you. That okay, besides we've seen oil markets, that's Iran-Israel conflict, and then the forbearance. But besides all this, are there any other market developments or any events or announcement that would shape the direction of the market, whether up or down, in the remaining days of June?
All right. Okay, so for that, we are approaching end of Q2, that's end of H1. So the earnings expectation is also a major factor for investors at this point. Okay, so we're approaching when results will be released, when possibly maybe some of the financial stocks will be able to pay their dividends, and also the fact that a lot of stability is also in Nigeria economy at the moment. So those things will basically be the drivers of positive performance in the market. We can't rule out profit taking anyway, mind you, because people that bought the dip might want to also capitalize and book some profit. But we expect that earnings announcement, for instance, since Sterling Bank released their full year dividends over past few days, and market has responded positively to that. So that is that we've heard about PZ Wimba saying, okay, we are selling off a portion of our holdings to one of our subsidiary companies, and that's for them, it's some income right there. So those are some of the other things that investors will be looking out to see. So there are a lot of things to look out for. So we just encourage investors to follow the news, stay with the fundamentally viable stocks, as we say.
I'm sure they definitely will, especially with your guidance. Like they always say, before any investment decision, consult your stockbroker. So thank you so much for your time on the show, and I'm sure investors will take your advice on that.
Okay. Thanks so much for having me. Bye.
That was Omotola Imafidon, equity trader with First Securities Brokers, formerly known as Ebian Quest. Okay, let's talk about the Middle East. Middle East is in the side notion of eyes. Yesterday was the 6th day of the conflict between Israel and Iran, which is still causing a cause for concern around the world, not just around the region. But talking about around the region, the Dubai and the Abu Dhabi indexes within the United Arab Emirates in the red, 0.90%. For the Dubai, 5,002, 58.29, and for the Abu Dhabi, almost the same margin, 0.87%, 9,413.28. So the impact of that is denting investor sentiment, and we don't know how long this will continue. But this is the final trading day for the week for the markets around the Middle East. Now, for the Tadawul, that was the lone gainer there. It was at intraday was up by a tad 0.5%, 10,315.70, while the Qatari Stock Exchange is still catching on with that negative sentiment, just at intraday down by 0.84%, 10,261.14. All right, so let's talk about the world's biggest economy, the United States. We see that the stock futures there, well, the stock futures, there were mostly not too good picture there. Just overnight, we saw that the U.S. Federal Reserve, as the country's central bank, had announced that it is still sticking to the previous interest rate. So there's no change in the interest rate, still within the range of 4.25 and 4.5%. So investors are not really too happy about that, and not to mention the impact of the Iran-Israel the conflict there, which is also having an impact, just of a little bit concern. But the major concern is the U.S. Fed's unchanged stance as far as interest rates are concerned. U.S. President Donald Trump has been calling for a cut in the interest rate. But so far, the U.S. Fed Chairman Jerome Powell says he's waiting to see what the impact of Donald Trump, that's the President Donald Trump's tariff on inflation, would be like before considering any adjustment to monetary policy. So that's why the market is still in the red. So it's more like a wait and see, but not too good. as far as the markets are concerned. So U.S. market will be open at about 2:30 Nigerian time here, and then about 9 o'clock within the U.S. So that's it for the markets on the world's biggest economy. Now, for the markets around Asia, which is our last stop, we see that it's mostly a negative picture there, particularly led by the Hang Seng Index, which was down by 1.99%, 23,237.74. But the only gainer there was the South Korea's Kospi. There we see the likes of SK Hynix, Samsung, and some other components of the bourse there on the South Korean bourse, up by 0.19%, 2,000, almost the 3,000 level. For the Nikkei, it's still tottering in between 39, 38, 37, and still trying to come back, but that comeback didn't go too well for the close of Thursday's trading session. It was down by 0.08%, as you can see on the screen there. And then the final two stocks that we see within the Asian region, we see the Nifty 50 and the Shanghai, both in the red, 0.79%. That's for the Shanghai, and the Nifty 50 down by 0.08%. So, Ladi, it's mostly the reds that have it, even for Nigeria. But we're seeing that Nigeria's stock market might close Thursday's trading session in the green.
Might. And definitely the U.S. markets are closed today for Juneteenth. And we'll open tomorrow. We'll see how investors react more to that interest rate hold. Thank you so much, Anita, there for details in what's playing out with those markets. But let's take a look at European markets now and how they're doing. We have our correspondent, DW correspondent there, Chipondo Chimbelu. He's been keeping an eye on them. Great to have you, Chip. How are the stocks trading in Europe?
Well, the news isn't that different in terms of European shares. They are also trading lower today. The pan-European Euro stock 600 is actually down 0.48%. And Germany's blue chip index, the DAX, is actually down 0.6%. And that is more than 1,000 points from its record high of 23,340 points, Laddie. Now, investors, of course, fear that the United States could become part of the conflict between Israel and Iran. There have been media reports that the United States President Trump has approved plans for an attack on Iran, but he is yet to make a final decision on that. So there's obviously concern over oil prices, which have already spiked as a result of that conflict. Now, high oil prices would, of course, lead to inflation, and that is why there is concern about spillover effects should the United States become part of the conflict between Iran and Israel. And Iran, of course, could also consider blocking the Strait of Hormuz, which is a major waterway through which a fifth of the world's oil supply is transported. And that is another reason why investors are, of course, keeping a very close eye on the conflict between Israel and Iran.
Well, let's turn to another topic now. See U.S. firms outspending European firms on research and development. That's R&D, and that's according to a survey by consulting firm EY. What more can you tell us about this?
Well, Laddie, the numbers speak for themselves. Out of 500 global firms that are research intensive, more than a quarter are American. And those U.S. firms spent 524 billion euros on innovation last year. And that is more than double the amount that was spent by EU companies represented in that EY survey. Now, American firms have been outspending their European peers on R&D because they, on average, allocate a bigger chunk of revenues to research and development. And that is a trend that we can expect to continue over the coming years. While European firms have also been increasing spending on R&D, US firms have been increasing their spending faster. And that is why the gap on spending has been growing wider. And that, of course, does raise questions about the EU and whether it can achieve its goal to be more independent from the United States, especially when it comes to technology.
And how does this affect EU's competitiveness?
A huge part of the trend, Laddie, that we are seeing has to do with the tech industry. Now, the leading spenders on R&D in the world are all US-based tech giants. So that is, of course, Amazon, Google parent Alphabet, Facebook owner Meta, iPhone maker Apple, and Microsoft. There is no European tech firm in the top 10. In fact, the only EU-based firm in the top 10 is Europe's biggest car maker, Volkswagen, and it is in 7th place, having spent 18 billion euros on R&D last year. And of course, VW is a company that has been struggling in recent years. And that is, of course, in part that it hasn't been able to keep up with growing competition from Chinese car makers in the electric vehicle market sector. Now, those car makers, of course, from China have been more innovative. And European companies, of course, like VW, are not just facing more competition. They also have to deal with the continent's structural economic challenges. And those, of course, include an aging population, higher personnel costs, red tape, and of course, expensive energy. So the question is whether the EU can fix its structural economic challenges at the same time and be able to motivate companies to invest more in R&D. And of course, that is going to be a very tricky task, Ladi.
All right, thank you so much, Chip, there for giving us the details of what's playing out right there in Europe. Thank you.
Cheers. Thank you.
Well, let's see what's happening in the commodities market now. See, in 2025, smartphone prices in Nigeria, they've risen about 80%, contributing to a 7% decline in early year smartphone sales. The NCC also reported a 29% drop in total active mobile subscribers and a 38.8% fall in average revenue per user in 2024. Let's explore what's driving this now. Let's talk to Rosemary Ahira, who's an analyst with FDC. Great to have you, Rosemary.
Good afternoon, Ladi. Thank you for having me.
So this, what the data is showing us, right now about the prices and average unit there of sales, that's for most of these phones. What does this mean? And what are these trends? Are they specific to Nigeria, or do they reflect a broader global pattern?
Well, Ladi, firstly, the increase in the price of smartphones, the reasons are not far-fetched. So in 2022, the dollar was appreciated. Due to the unification of the exchange rates in mid-2023, we saw the naira depreciate a lot to the dollar to about 1,400 to a dollar. So, and as of today, we see the naira trading at about 1,590 naira to $1. So right now, Nigerians are paying almost 4 times the amount they would be paying for to get a smartphone. So for instance, say a smartphone cost about $200 in 2022. In 2020, they should be paying about 4 times that amount. So it has become more expensive. So exchange rate pressures, we have increased import costs and supply chain disruption. So import costs. So importers are facing increasing costs from logistics because of increase in fuel, tensions in the Red Sea, and also they are also faced with a lot of taxes. So they have VAT that they have to pay 7.5%. They have custom duties that ranges between 5 to 20%, and they also have other levies that they are paying as well. And all these things, all these prices, all these levies are all pushed to consumers. So consumers are faced with higher prices of these smartphones. And although Nigeria's situation seems a bit much, it's not unique to Nigeria. So smartphones the price of smartphones are increasing globally, but we are feeling it more here in Nigeria because of and other developing markets actually, because of situations that are unique to our market. That is exchange rate pressures, increased costs because of infrastructural issues and whatnot.
Yeah, it's quite incredible. I remember there was a time you could get a high-end, brand-new smartphone for around 250 to 300,000 naira, but we don't see that anymore. We know smartphones, are essential for digital access in Nigeria. But with telecom, charges up 50%, the device price rising, how could this drive inflation, especially, giving ICT's 3.3% weight, in the CPI?
Well, any hiccup in the price of and telecom charges will directly affect headline inflation. In the previous CPI basket, it was about 0.7%. Now it's 3.3%. So it's a major increase, and this would put pressure on consumers who are currently struggling with stagnant wage growth, and they're also faced with increased food and transportation costs. And in practical terms, they will definitely see a reduction in income generating activities and productivity, because some Nigerians, or millions of Nigerians, actually depend on their smartphones for income generating activities. And with this increased tariffs, increased charges, there will definitely be a reduction in how much people buy and how much people put out there online. So it's going to definitely constrain household incomes and put more pressure on the average Nigerian.
All right, so with, definitely we know in economics, when prices rise for a product, there's some kind of substitute, at this point. What would you say is a substitute here for these phones, with prices really high? Do we go back to smoke signals?
Well, I can say for certain there is no close substitute to smartphones, because right now, what a smartphone can do, even some personal computers cannot even do it. And we are seeing a lot of app developers developing products or programs that are specific to, or like our mobile phones centered. So because of the growing markets, and smartphones they're durable, they are easy to carry around, they are versatile. You can use them for a lot of different things, a lot of, like I said, income generating activities, from video editing to content creation and even remote work too. So as at now, there is no close substitute to mobile phones.
Yeah, definitely. Thank you so much, Rosemary, there for breaking it down. We'll keep watching to see, hopefully, this prices come down. Thank you so much.
Thank you for having me.
All right, so other stories now. We see Qatar is in advanced talks to invest $3.5 billion in a tourism project on Egypt's Mediterranean coast. Latest potential Gulf backing for the North African nation's economy that's been roiled by the regional conflict. The deal to develop land in one of Egypt's prime vacation areas may be signed by the end of 2025. That's according to people familiar with the matter. They didn't specify the exact location or size of the site and asked not to be identified, but definitely that's one investment plan there being watched by investors. And we see Kenya's central bank has successfully raised 71.6 billion Kenyan shillings by reopening a long-term treasury bond earlier this month, surpassing its 50 billion Kenyan shilling target and drawing about 101.4 billion Kenyan shillings in total bids. On June 10th and 18th, investors were invited to bid on the 15-year bond to help finance the 2025-2026 budget. The accepted 71.63 billion Kenyan shillings split between competitive and non-competitive bids was settled by June 23rd, offering coupon rates of 12.756% and 12%, subject to a 10% withholding tax at maturity. And to other matters now, see the U.S. has resumed student visa processing with new social media screening requirement. The U.S. State Department resumed the processing students' visas from F, M, and J categories, now requiring applicants to set their social media accounts to public for government scrutiny. A notice was issued yesterday and reversed a one-month pause and introduced stricter vetting. Failure to comply may result in denial, as consular officers will now screen applicants' online posts for potential hostility towards the U.S. culture, institutions, or national security concerns. All right, let's head to another conversation now. We see Africa, crypto in Africa is a dynamic frontier for digital asset adoption, with countries like Nigeria, South Africa, and Kenya are leading in crypto usage despite varying regulatory approaches. While some nations embrace innovation to foster financial inclusion and cross-border payments, others, they impose strict bans due to concerns over monetary sovereignty, fraud, and financial stability. Recently, Yellow Card, Africa's first licensed stablecoin payment orchestrator, released its regulatory report, breaking down the data trends and regulatory shifts. Join us to discuss now. We have Craig Stower, the General Counsel at Yellow Card. Great to have you on the show.
Thanks for having me again.
So tell me, Craig, what were the key takeaways for you from this report?
I think the key takeaway for me is really the speed at which many countries across Africa are moving to regulate the digital asset space, right? I think a couple of years ago, we had a handful of jurisdictions that actually had some type of regulations or were moving forward. And now we have, almost several dozen who have either implemented regulatory frameworks or are introducing legislation or regulations.
In your view, how can regulators balance, consumer protection when it comes to AML, KYC, travel rules, and, fostering innovation in fintech hubs like Kenya and Ghana, where digital assets are rapidly evolving?
Yeah, I think we're seeing a lot of that. Regulators are moving to, I would say, look, their number one objective is to protect consumers, right? And to create a level playing field. And also, of course, they're concerned with money laundering, terrorism financing, things like that. And by implementing regulations, they can help achieve those objectives.
And we know South Africa, they've implemented licensing requirements for, crypto asset service providers as a CASP, and enforced the FATF aligned directives. What are the pros and cons of this rigorous licensing model, compared to lighter touch regimes under the development elsewhere?
Yeah, I would say, South Africa is somewhat unique in that they took an existing regulatory regime for financial services providers, and they added crypto asset service providers like Yellow Card to that regime, which I think is it basically keeps in place what's there. Other jurisdictions have developed kind of their own regulatory regimes, which in many cases have been good, but as you progress, you see that some things maybe are missed. I mean, even in Europe, right, the MiCA regulation missed the payments aspect of crypto assets. So look, everyone has their own approach based upon their own objectives and what they're trying to do. I think the important thing is that people are taking action. They're doing something, and of course, as with any legislation, right, things are amended and developed over time depending on how things work.
All right, then definitely we can't have this conversation without stable coins. They're playing an increasingly central role, across Africa, helping navigate local currency volatility. But how can the central banks and regulators support these solutions while ensuring that they're well managed and aligned with monetary frameworks?
Yeah, I think so. Stable coins obviously are digital assets, cryptocurrency. In many regimes, they're incorporated indirectly. I think to some extent, right, if you look at what's happened, at least with the Senate passing the Genius Act and now going to the House, you've seen that a stablecoin regime is a little bit different and maybe should be treated differently. And I note that your Securities and Exchange Commission announced yesterday, I think, that they're looking at developing a separate regime for stablecoins. So I think that's important. I think the other thing I would note is that across the continent, digital assets or stablecoins aren't incorporated into the foreign exchange regulations. So certainly the framework is there. If central banks want to incorporate stablecoins, I think they could do that quite easily.
And looking at it from a regional level now, we see Kenya, Tanzania, and Ghana, and others advancing regulations at different paces. How important is regional harmonization, especially under frameworks like AFCFTA, to avoid, fragmentation and, somewhat promote cross-border crypto use?
No, that's an excellent question. I think it would be very important, right? It's difficult to harmonize legislation unless perhaps you're in a regional monetary union like UMOA or CMAC. But I think it's important that, and I know that regulators do this, they share intelligence, developments, insights, and to the extent that they can, keep coordinating, you end up with maybe not harmonized, so to speak, but at least regulations that are similar, because that's one of the things that makes it difficult for people to operate in the space and really give the best service to their business and individual customers is when you do have kind of fragmented regulatory regimes. You have to do different things in different markets. Makes it difficult to operate a global business.
So, given, ongoing legal uncertainty in countries like Nigeria, what enforcement or supervisory, mechanisms are essential, to monitor digital asset reforms and manage systemic risk, such as fraud, illicit finance, or capital flight?
Yeah, so I think those institutions and those frameworks for managing that type of thing is already there, right? If you talk about money laundering, for instance, in the traditional financial system, I think there's $2 trillion a year that is estimated to have been involved in illicit activity. So in Nigeria, for example, you have the EFCC, you have the NFIU, you have SCUML. And I think the thing to do is if you make people engaging in the virtual asset space, like we are, and some countries have done, you require them to register, you require them to report on suspicious transactions, and you work with them to achieve your objectives when it comes to trying to stamp out money laundering, terrorism financing, and fraud schemes that are perpetrated upon consumers.
All right, thank you so much. Let's leave it there now. Craig Stower, General Counsel at Yellow Card, thank you so much for joining us today.
All right, thanks, Lottie. Good to see you.
All right, we'll keep keeping a tab there on how regulation is playing out in most African countries. But let's get a quick check on what's happening with the markets there. We're seeing Bitcoin there holding $104,000 back in the green at this point from the big sell-off saw yesterday. Dominant sitting at 2.80%. XRP is also in the green, and a couple of major altcoins in the red there. Some major headlines now. We see South Korea's financial regulator. They're planning to investigate transaction fees charged by domestic cryptocurrency exchanges, aiming to reduce trading costs for users. And that's according to local media there. South Korea's Financial Services Commission will launch a probe into transaction fees imposed by local trading platforms and review potential intervening measures. And we see the U.S. there, the Department of Justice, the DOJ, filed a civil forfeiture complaint against more than $225 million in cryptocurrency, alleging the funds are connected to a widespread cryptocurrency investment fraud scheme. Then you see the Securities and Exchange Commission here. They're warning the public against investing in Zuga Coin and Samzuga GPT. In a statement issued there, the commission flagged the duo as unauthorized crypto assets, adding that the promoters or issuers of Zuga Coin and Samzuga GPT were not registered to operate in any capacity in the Nigerian capital market. All right, that's most of what we have for today. Definitely we'll give you the TGIF trade. That's for tomorrow. Thank you for watching BizInc today. Definitely the Thursday trade is still moving along. At this point, we'll give you an update tomorrow. From me and the team right here at Channels HQ, it's bye for now.